Thanks, Jason. I'm Charlie Noyes. I'm a general partner at Paradigm. And with me here today, I have Tarek Mansour, who's the co-founder and CEO of Kalshi, the world's largest regulated prediction market. So Tarek grew up in Lebanon, speed ran a TradFi career, and today our data suggests that Kalshi has grown to become the largest election market by volume for like large-scale elections. Powers over 1,000 prediction markets and is one of the fastest growing companies by revenue in the United States, possibly the fastest growing outside of AI. So Tarek, for people in the audience who aren't already familiar with Kalshi, could you paint us a snapshot of where the company is today? Like how many users do you have? How much volume is being done on the platform?
Yeah, well, first, thanks for having me, and very excited to be here. So maybe a little bit of sort of, last year we were sort of in the, what I would call the, deep regulatory winter everybody was sort of going through. We won that lawsuit against the government in October about legalizing election markets in the US. And since then, the October curve was probably one of the fastest curves, in terms of like adoption you could ever see. And we can talk a little bit about that. But, fast forward to today, and there's a few things from the election till today. So today our rate of growth is probably faster than any company outside of AI. Maybe Cursor. I mean, Cursor is probably unmatchable today, but other than that, I think Kalshi may be at the very top. We are doing around $1 billion a month in volume. We have millions of customers that are active. And the one last interesting stat. So we have around 1,500 markets live today, up from 80 back in October. So yeah, I think in terms of like broader asset classes, I think prediction markets is definitely the fastest one. Kalshi is sort of at the forefront of it in the US.
Of those 1,500 markets that you have live, which are some of the most popular, just to give folks a flavor of
so politics is super popular. Sports is extremely popular. And then it's kind of this sort of weird, and this is what the beauty of prediction markets are. Like, it's this sort of weird whatever is in the news at any point in time. And you cannot really predict that. I mean, I could have never predicted the Pope would be so big, but the market on the Pope was extremely big. So it's sort of this interesting thing is like whatever is on the front page of the Wall Street Journal or New York Times or X is going to be one of the things that's sort of trading the most on any given day. And I don't think that right dimension is like sort of which category or topic. It's more sort of like how top of mind it is for people.
Cool. So today, Kalshi is very big. Outside of the lawsuit that you won against the CFTC, could you give us the super brief story from the origin of like what the key inflection points for the company were that brought you to the current level of scale?
Yeah, so Kalshi comes from TradFi. I mean, I went to MIT, and that's where I started the company. And I spent some time at Goldman, Citadel, and a bunch of hedge funds. The thing that was always interesting. So I was very young back then, but in 2016, I was working at Goldman Sachs, and the thing that was super interesting is all the products, like all the demand that summer was essentially how do we get exposure to Brexit or do something about Brexit, and how do we bet on Trump or bet against Trump? And that was like the institutions, a lot like high net worth individuals, the corporations, and so on. And so it was very clear there was sort of demand for this sort of idea to like trade on events or like get exposure to events, or really kind of if you broaden it a bit, it's sort of this idea of trade on anything that's sort of relevant. It's like people can like articulate in natural language. And what we would do at Goldman is typical thing that a bank does. It's basically kind of like steal from your customers. Like you basically structure a bad product for them. And it was funny because at the time, the product that we sold it in droves, was basically this very complicated multi sort of strategy option swap and whatever that was effectively shorting the S&P on the week of the election. So like the S&P was going to be lower at the end of the week of like election week than it started. It's pretty funny because everybody that bought that product, they were all right about Trump winning the election. They all lost money. So it was like, well, that's one of the places where like, well, there is a 10x product to be built here. At least one where if you're right, you make money. And the second thing that was really interesting is like it was inaccessible. Obviously, most of the people in this room here, you don't walk into Goldman Sachs and ask for a product to be structured for you. So this idea of like could we build a financial market where the underlying could be anything? You know, we have a financial market for pricing equities like stocks. We have one for commodities or currencies. What if we build one for simple questions about the future? And, you know, the idea is quite deep because one is, you know, a financial market that prices anything, well, it could be at least as big as any other financial markets because a larger number of people could care about it. So the TAM, you know, could be really big, much larger than anyone even today is anticipating. And two is, well, it could be very useful because financial markets work. If you believe in financial markets, you believe they work and you believe that they should, in theory, see the future better than anyone else. And they do. They work in the election, they work for the economy, they work for weather, they work for anything really. And so you can imagine a world where like we get smart about the future by using financial markets, by using markets, which makes us make better decisions, allocate resources better, and so on and so forth. And, you know, we see this one now. Doge is pulling our markets to basically make decisions on policies. It's happening in various places in the government, like the Fed and other places. So we started the company. This whole thing was illegal. We had to fight the government for 3-4 years to legalize it, which we did.
Maybe just to ask one question on that. So I think it's really impressive that today you can download Kalshi's app as a retail user, or if you're a Robinhood user, access markets through their partnership with Kalshi. In crypto, I think we often have the assumption that regulators are not going to bless anything truly innovative. And in your case, it seems like you were able to actually walk in the front door and get them to say yes to you launching a product that didn't previously exist. And not only that didn't previously exist, but that can be distributed out to a general retail audience in the US.
Yeah.
That's super easy to sign up for and anyone can use. And at least for me, that was like kind of shocking. I would actually struggle to think of another recent example of a company that was able to do this, get a truly innovative product launched with the blessing of a regulator, as opposed to trying to come up with some other avenue. And I guess maybe could you just talk about that a little bit? Like, how did you guys make that happen?
You know, there's like always sort of this sort of, I'll address a few things. I mean, you know, oftentimes, honestly, the right answer to a lot of these things, and I try to be as honest as possible, is we sort of like, we just ate shit for longer than anyone else and it worked out. And it's honestly more often than not the right answer. You know, like Mark Andreessen has a sort of quote, I forgot exactly the quote, but it's like, you know, the good CEOs tell you about the secret sauce and the great ones. I don't know if I'm a great CEO yet, but like generally they tell you like, I just didn't give up. And it was really kind of what the thing was. Like it was, I mean, it took us 3.5 years in an actual hellhole battling with the regulator and trying to convince them why this is actually a good thing for society and trying to do it the right way. And the reason why that was important is like, I never thought that there would be institutional adoption the way that we're seeing today if we didn't get regulated. Like I never thought we could do it on the outside. And the reason is because historically, you've never seen a financial market really grow outside of the bounds of the law. Like it's you get at a point and you get big enough and then you have a curse of scale. You get to that. So it was, you know, it was really kind of taking the time and fighting through that really long sort of regulatory hell, up until we convinced them to do it. And it's a mix of like, you know, really good strategy. We hired the right people. We lobbied the right people. You have to kind of play the politics right. And you have to do the work. And it's a lot of hard work. I will say though, it was not like a clean journey. Like, you know, after we got legalized, and so we had the first prediction market that was legal in the US. After that, you know, they still blocked us from doing the election market. So, you know, Kalshi launched our election market in October. We were very late.
You might have been the only non-crypto company to sue its primary regulator.
We were the first that sued. We sued before Coinbase.
Really?
Yeah, we sued at the most sort of unsuable time. Like, it was really like hardcore Biden era where like regulators were truly almighty. And like the decision to sue was like a very tough one. I mean, you know, Sequoia's on our board. They're like, well, we've never seen a startup sue their regulator and live. Right? And it's true.
The list of companies who have done it in one is very, very small.
It's also very small. Yeah. But like, you know, we thought it was, we always believe we were right on the law. And we also believe that like, these are good for society. Like they need to. So we did sue. It's a very difficult decision because when you sue your regulator, what happens is like, and it happens, you know, Brian Armstrong talks a lot about this and we talked a bunch about it as well. Like what happens is it's sort of death by 1,000 paper cuts. Like they hit your business from a variety of different perspectives. You tweeted this once. That's like, you know, we're going to take you to jail for that. You know, like everything just becomes this sort of overblown, you know, you jaywalk on the street once, they're like, okay, you're going to jail for 20 years. And so they will kind of hurt you in many ways. But I think that maybe the key learning here is if you sue a regulator, make sure you win. Like, because if you had lost that lawsuit, I think things would have been pretty bad. But we won. And, you know, once we won, I think it was totally worth it. Like, because now it's the first time in US history since the Great Depression that you really can financialize anything. Like we can now financialize that lawsuit when it was just not about legalizing trading on the election. It was legalizing this concept that you can trade on anything as long as it's not sort of like really bad, as long as it's like terrorism or something that can incentivize people doing something bad, which has broadened the set of things that basically we can do. And in some ways, I think we really kind of delivered that for markets in some way. And I think that was really important. And the results kind of, and the numbers really showed. Like, you know, within 3 weeks, I think we grew something like 100x. So it was totally worth it.
Yeah. And in your guys' words, you spent 3.5 years in a hellhole to get licensed.
Yeah.
You sued your primary regulator, you know, to enable you to use those licenses in the way you wanted to. You won. Today, platform's very large. It's working with some large partners like Robinhood and Webull. Maybe you could talk a bit more about that. But also curious, where do you see it going from here? Now that you guys feel that you have the ability to financialize everything, what do you think the next like 3 years will hold?
Yeah, so so we did the election. Then this year, the change in admin and a few things, we entered sports. So we're like the only legal place in the US where you can do sports in all 50 states. And it's still the prediction market format. You're trading against other people. And then we launched, so we have Kalshi.com, which is sort of you can go to the website and trade on Kalshi directly. But financial exchanges, you know, in general, and this is sort of a very important thing for crypto as well, like, and Coinbase is following that strategy. A lot of people are following that strategy is, you know, when you want to buy a share of stock or you know, an option, you don't go to CME or SIBO or the New York Stock Exchange. You go to Schwab or Robinhood. And so the structure is you have the exchange and the clearinghouse. That's sort of the financial infrastructure that, you know, owns the asset class. And then you have a brokerage layer. So it's Schwab, Fidelity, Robinhood, and so on, that basically gives you access to those financial assets. And, you know, I always love that model because brokerages have mass amount of consumers. So Robinhood has like something like 25, 30 million funded wallets. Schwab has maybe like 70. Fidelity, another maybe like 50. So, you know, you get 3 or 4 of these brokerages and you basically have all of like, you know, wealthy people in America or people that are kind of beyond a sort of reasonable amount of wealth that could reasonably trade in these assets in America. So, and we've kind of followed that strategy this year. Well, we've been working on it for 2 years, but, and we launched Webull and Robinhood, and we have something like 15, pretty much within the next 2 years, we'll have all the brokerages in the US. And you can feel that mainstream adoption now. Like it's, you know, you suddenly go from like, people dipping their toes into this into just sort of like, well, this is being traded next to stocks and next to your, options and next to your crypto and all of that. And that inflection curve is even deeper than the election. Mm-hmm. And, you know, I've seen it in the numbers. Like, what's next is I think now we kind of have the distribution. We have the liquidity that we've been sort of partnering with market makers like Susquehanna and you know, and a bunch of the others. The rest is kind of like, how do we like, yeah, exactly. How do you kind of scale the number of frogs from 1,500 available today to 5,000? Like, and I can imagine people basically over time, like, you know, you're buying COVID the same way you buy Apple, like, because you think that COVID is going to go worse. So you go long COVID, or you can go short real estate, or you can go long Eric Adams, which a lot of people were doing last night after Mamdani won. Like, it's like, you know, everybody started buying Eric Adams. His odds are at 20%, which is still quite low. But imagine a world where basically any difference of opinions can be settled on prediction markets. Like you debate about something on the dinner table and like whether this is the price of an asset or something happening in the future, and you can basically trade it actively on a prediction market. And then this kind of expand into all sorts of structure. It doesn't need to be yes, no. It can be sort of like, you know, going long or short. And I could see these products being popular for weather or crypto or a bunch of other things.
Yeah, weather markets are surprisingly popular, right?
Yeah, I hate these markets because we launched them. We never really did any marketing, provided liquidity or anything, but they trade so much. Like, it's like insane. And then there's people that sort of now like, the other kind of emerging behavior. So a lot of people do Kalshi full time. It's their full time job. So
There are people making a living trading Kalshi now.
yeah. So we have a number of people slash small teams that they were always prediction market fanatics. They're always waited for this sort of like wave to finally sort of hit them. And like we have a number of teams that are making 8 figures on Kalshi, $10 to $20 million this year. And then there's like a whole kind of set of people that are making in the millions.
Wow.
And it's trading weather, economy, politics, sports is another big one. And it's amazing to see because it's like a bit this sort of same emerging behavior that you saw with Uber or Airbnb. Like, you know, people becoming Airbnb hosts became their thing. Like that's how they make money and they make a living. And people driving, becoming riders on Uber, it also became sort of a part-time or full-time job. And you know, it's like you're monetizing your time on Uber. Here, you're monetizing your knowledge. It's like you could be smart about a bunch of other things, like whether it's politics or weather. You can go and do research and seek information, and then trade it in the marketplace and be rewarded for it. And I think this is the most exciting part of what we're building because it's sort of enabling participation for a much broader set of people than the set of people that cares about, you know, what are sort of Cisco's financials going to be next quarter.
To date, I think the crypto economy and like the traditional or regulated economy have largely been parallel economies. And I guess I'm curious, do you see that continuing to be the case or do you see it blurring? And do you see Kalshi at any point being a crypto company?
Yeah, I never really thought about them as sort of two separate things. Like we're like, well, Kalshi is not a crypto company. I mean, it's funny because anyone in crypto says Kalshi is not a crypto company. Anyone in Congress says Kalshi is a crypto company for some reason. They kind of like bundle every new financial thing into crypto. So like, it's interesting. I never really thought about them. Like my view is like over the next 5 years, what we'll realize is like all fintech, any kind of financial services company is inevitably going to be a crypto company. It's kind of one and the same. Like I really think so because like, you know, like do you imagine I mean, Schwab is kind of leaning into stable coins. If Schwab is leaning into anything, that means everybody's going to lean into that thing. So, you know, like yes, in 5 years, all financial services company will have like crypto rails where, you know, accept all sorts of sort of payments, you know, whether it's stable coins or crypto itself. You're going to be building stuff on crypto rails to accept those payments. I think over time, you're seeing this, you know, Robin is sort of leaning in pretty heavy in tokenization, but a bunch of kind of like, let's say TradFi firms, and same with us, like, are leaning in heavy on sort of like, what could we do sort of on the exchange and clearing side? How much of it could we put on chain? And you're seeing regulators sort of be open to that now, finally. And so I just really don't see the distinction as clearly. Like, I think we're going to adopt crypto rails pretty heavily because they work better. Like, you know, they make sense, you know, like you today, if I need to accept a deposit via kind of a bank transfer or ACH, I'm taking a bunch of risks that are completely unnecessary as a business. People can claw back, people can commit fraud. It takes forever. It still takes 4 days for a bank transfer to settle. And it really does, right? That's still the experience for like 95% of America, if you think about it. And like, there's no way that we get to 2028, 2029 where that's the case. Like, you know, and so I just think they're kind of financial services companies and crypto in 3-4 years are not going to be seen as a different thing. It's just going to be a technology that you use, the same way that we use Visa and MasterCard and a bunch of other things. And that distinction is not going to exist, which I think is very bullish for both TradFi and crypto.
Cool. Maybe last question. A decade ago, Bitcoin at 2 trillion and being adopted by nation states would have sounded completely insane. 10 years from now, if things go really well, I'm curious what you think the world might look like, or prediction markets might look like in the world.
You know, it's one of those things that's like, once you see it or hear it, you can't unhear it, right? It's like, you know, it's not that deep, right? Like, it's like, you know, we can buy a stock. Like, why can't I buy Eric Adams for the next, like, it's just so obvious. And it's in the set of people that care about, you know, buying Apple stock versus the set of New Yorkers that cares about who's going to be the next mayor. That second one is just so much bigger. And so I don't know, in 10 years, I just don't see I don't see any reason for prediction markets not to be bigger than the stock market, or at least as big. Like, I think the foundation is there. Like, from first principles, I think we can get there. And now it's a matter of sort of execution and scaling the business and like, working with regulators and opening up the sort of floodgate for, now we have Robin and Webull, like Schwab and Fidelity, and how do we put it in sort of all the brokerages? And I think we're not even 10 years out. I think we're maybe like 2 to 3 years out.
Super exciting. All right, I think we're at time. Thank you,
Cool.
Tarek.
Thanks for having me.